Hello everyone and welcome to the Capital News. I am your host, Alex Kreitis. I hope you all enjoyed your weekend. Today is February the 18th, 2019. President's Day here in the U.S., so the markets were not open, so I don't have much market news to report, obviously, since the stock market and the bond market were closed today. But we can go overseas and we can say, well, there was some movement in the Asian markets to the upside. European markets didn't have much movement today, but the Chinese Hong Kong stocks really soared. And why? Oh, well, you guessed it. You guessed it. It's more talk on the U.S.-China trade talks. Let me read a tweet for you. This is, of course, from President Donald Trump on February the 17th. Important meetings and calls on China trade deal and more today with my staff. Big progress being made on so many different fronts. Our country has such fantastic potential for future growth and greatness on an even higher level. Now, that last part I absolutely agree with. I think there's a ton of potential in this country. It's just strangled and consistently and constantly strangled and suffocated by the government, the federal government, state and local governments. How many regulations? How many redundancies? How much red tape? It goes on and on and on. But there is so much potential. We have so much human capital. The entrepreneurial spirit that made this country so great and serves as a beacon for the rest of the world, why people still want to come here, is because of free market capitalism. Because of our creativity, our imagination that has no bounds. But as soon as you start stamping on a whole bunch of regulations after regulation after regulation, and it all deals with a lot of the same stuff. There's so many redundancies. I mean, you want to talk about some solutions. We can have that conversation here. That's what this is all about. It's not just talking about the problems. But what are some of the solutions? Well, we know regulations undoubtedly hurt business. Now, I'm not saying that there does not need to be any regulation, but remember this. In a free market system, the best regulation is failure. Okay? It's failure. When we had the crisis of 2008, 2009, the very institutions that were at the heart of the problem were saved. And they were saved with your tax dollars and with my tax dollars, and they were bailed out to the tune of trillions and trillions of dollars. You didn't receive trillions and trillions of dollars. You didn't even receive millions and millions of dollars. You didn't receive thousands and thousands of dollars. You received bupkis, nothing. But the banks sure made out just fine, didn't they? CEOs were able to remain CEOs, and if they weren't, well, they had their golden parachutes, didn't they? Millions and millions of dollars for their retirement, as if nothing ever happened. That's an economic crime, in my opinion. Nobody went to jail. There was one guy, one schmuck who went to jail. And that was a few years after the fact, and he was involved in some interest rate rigging. He was a low man on the totem pole. But that's what happens when you don't have a free market capitalistic system. That's what you get. You get banks that take on excessive risks because they're dealing with funny money. There's no sound currency. The central bank just says, here's some money, go do something with it. And they do. They gave that money to people who couldn't afford those loans. And what happened? The very predictable. They defaulted. And that has serious ramifications for every aspect of the economy, as we all witnessed. And it wasn't just the U.S. economy. It was global. It was global. And we're still feeling the pain of that. And we're still embarking on a crazy economic experiment of low interest rates and quantitative easing, which again is debt monetization. Let's just call it what it is. It's debt monetization. It's a default. But everybody's doing it around the world. So who cares, right? Well, we're all going to be caring in the not too distant future when all of this unwinds. So be prepared. So we continue to have these discussions. And we're going to continue until this ultimate deleveraging takes place. Well, what are some of the solutions, at least in regards to the regulations, right? My opinion, I don't really like it when everybody says, well, there needs to be a presidential commission for this, a presidential commission for that, so on and so forth. But there are so many regulations that exist at the federal level that I think it would actually be a prudent move by President Trump, despite what he's already doing. If there's a new regulation, there's so many that get cut, that's the deal, and he has been cutting them. Put a commission together. Make it as bipartisan as you possibly can. And say, go look everywhere. Look at all of the regulations. How many of them are redundant? How many of them are outdated? And start from there. That seems to me to be such a reasonable and commonsensical starting point that you should be able to get people on both sides to come together. Now, of course, I just used the word logical and commonsensical, so we know that ain't going to happen, but I'm going to be an optimist today here. Why can't that be a good starting point? We have an issue with our federal debt. Nobody talks about it. We want to create a new economy. President Trump wants to talk about there being such great potential. The Democrats want their Green New Deal in some form or another. Well, they're not going to be able to start this new Green Deal with all of the red tape that they're going to have to do. I talked about this previously. How much red tape are they going to have to cut to go green? So here it is. Here's your launching pad. Get together, sit down. What is holding back the American spirit? What is holding back companies that exist? And what is holding back entrepreneurs who are sitting in a desk job 9 to 5 who can't stand it? But when they look at everything that they would have to do to start a business, they say it's just not worth it. How many geniuses are sitting somewhere not doing something because they're just overwhelmed by government regulations? Now, I would hope that doesn't deter too many people, and I don't think it does. I think the cream does always rise to the top. But nevertheless, there's a lot of people out there who could contribute quite a bit to this global economic engine, most definitely the American economic engine, who are overwhelmed by starting a business because of all of the I's they have to dot and all the T's they have to cross. You need a lawyer for this, you need an accountant for that, I need a fee, I got to pay a fee for this, that, and the other thing, I need to get licensed. All I want to do is sell this, that, or the other. All I want to do is offer this service, and I got to do all this. It becomes overwhelming because they are not masters at all of those other things. But they're great at what they want to do. They're great at the product they want to sell or the service they want to offer. The government should be getting out of the way. But that's not what the government does, because the government wants to be important. And the government can only see itself as being important if it's involved in everything. So I think that's a commonsensical solution. Put a commission together. Go through everything. Everything. What's redundant? What's redundant, get rid of it. What's old and outdated that has no effect on anything anymore? Get rid of it. And start to see how much money that saves and how much money starts to go back into the economy with companies investing in new entrepreneurs coming into the market. Because there's no doubt that there are a lot of regulations that act as a barrier to entry. Those need to be as low as possible. Are there environmental things that need to be handled? Sure. But that can also be handled in a free market system. That can also be handled through government. But doesn't have to be through the legislative branch. It can be through the judicial branch. You don't have the right to pollute on somebody else's property. So allow the property owner to sue in court. Receive damages. Change the outcome, the practice of the corporation that may be polluting, if they're found to be guilty of polluting. It doesn't all have to be done through people in Washington, D.C. It can be done by people in Harrisburg, in Albany, in Sacramento. That's what the United States is about. It's an experiment of the states. We're to be united around the idea of America. An idea of freedom. And the only socio-economic system that is compatible with that idea of freedom in the individual is free market capitalism. And when it's allowed to work, it works beautifully. Every time, all the time. Because it doesn't know how not to succeed. Because it's about people pursuing their dreams and keep moving, and they keep moving, and they get support by other people who are trying to pursue their dreams. And it keeps working, and it keeps working. The exact opposite of socialism, communism, fascism. Because it's all about control. It's all about top-down. It's all about centralization when you talk about governments. And if the government collapses, the whole house goes down. But free market capitalism, it's decentralized. One thing suffers, there's 99 more to pick it up. It's diversified. Makes sense, doesn't it? Why people like AOC, Pocahontas, just everybody on the left, why they can't see this, why they refuse to see it, is beyond me. Or they do see it, and they still want it. So it's either ignorance, or they're power hungry. Which we should be scared of. Because what are these people going to do with the power? Because we know they always want more. That power belongs to us, we the people, not we the government. So, getting back to some of these U.S.-China trade talks. Let's look at a post here by the South China Morning Post, entitled, China applauds positive Donald Trump tweet. Hopes for U.S. trade war deal ahead of Washington talks. Opinion piece in major state media outlets is seen to be a part of Beijing's efforts to reassure its citizens that the tariff war with the United States will soon be over. A Chinese delegation led by Vice Premier is headed on Tuesday for the American capital after last week's trade talks in Beijing produced, quote, progress. You use the word positive, you use the word progress. Markets rally. Are we going to get a deal by the March 1st deadline? I don't know. I don't know if President Trump wants a deal by the March 1st deadline. I mean, he has to love how the markets respond to a tweet or a comment by Kellyanne Conway or the Treasury Secretary or Larry Kudlow. They come out and they say, well, it's good. They're going to meet soon. There's good vibes going on out there. This, that, and the other. Markets just keep going up. He keeps talking about markets making new highs. Well, if he can get another 60 days out of this hell, the Dow Jones might hit 30,000. If they make a deal in a couple weeks, it could be buy the rumor, sell the news. There could be a sell-off. Because so much of this positive progress is already priced into the markets. So I don't know what's going to happen. We know he's going to meet Chairman Kim Jong-un of North Korea at the end of the month, February 27th, 28th. I highly doubt he's going to meet with President Xi of China before then, because then it'll look like that's trumping the North Korea story. I don't think Trump wants to have another story trump his meeting with the North Korean leader. So we'll see what happens. But it's interesting how this continues to be the narrative. And I think President Xi, on the same note, wants the same thing because this keeps propelling the Chinese markets up as well. So as long as they can keep this narrative going, it's helping both sides. It's not right, but what difference does that make? Now, the other thing that's interesting, we have some further data coming out of China, a little mixed. Exports were better than expected by a decent degree. But then we also have, auto sales that are continuing to decline in China. We also have retail sales that are continuing to decline in China for the 8th consecutive month. So despite that hard evidence of continuous poor economic news, with, of course, the backdrop of exports increasing, the markets continue to rally off of the hope that a trade deal will be met. I just don't know, guys. I think both sides want a deal. I go back and forth as to who, quote-unquote, needs a deal. But this is just, to me, it's a lot of it is smoke and mirrors. Are there some serious things that need to be addressed? Absolutely. The IP, the technological, the operations, the tech transfers. I just can't see China caving in on that. And if they do, I think it would just be a question of rhetoric. Yeah, they might sign some papers, but are they actually going to follow through with it? Because that's a big deal. I think that's at the heart of really what's going on. In addition to a whole bunch of geopolitical things behind the scenes, there's a lot of cyber attacks and cyber warfare. You have the whole thing with Huawei and executives getting arrested and the Chinese retaliating against the Canadians and all that jazz. I don't want to get into that. But there's a lot of stuff going on that has to do more with the tariffs. And of course, the president continues to tweet and get up there and say, he loves tariffs. I love tariffs. I love them. I love them. So maybe we should just keep this going. We're getting billions and billions of dollars from the Chinese. That does such a disservice to the people of this country, especially those who don't know any better, that a tariff is a tax on trade. The Chinese are not opening their checkbooks and writing out billions and billions of dollars to the U.S. Treasury. It's not happening. We have increased prices because of a tax. It's either the businesses who might be eating it, or they're passing it on to the consumer, or some combination thereof. It just gets me going. It makes me wonder if the president doesn't get it, doesn't care, doesn't know. It's just a disservice, because I think he has people, especially in his base, who believe it. And I just think that's a disservice. It's a disservice. We have, so much debt out there. And a lot of it is because people don't have a solid understanding of finance and economics. So for him to go out there and say that the Chinese are paying us billions and billions of dollars, it's just simply not true. And why more people aren't calling him out on it, I just don't know. If you like tariffs, if you like trade wars, okay, you can say that. That's fine. You're allowed to say that. But don't tell the people that it's the Chinese directly sending us billions and billions of dollars to our treasury, because it ain't true. So don't do it. Ugh. Now, just gets me going, along with a whole bunch of other stuff. You got him tweeting and talking about that stuff, and you got the Federal Reserve reversing course, ECB reversing course, Australian Reserve Bank of Australia is probably going to reverse course. You had the Bank of India reverse course for political reasons. The Japanese are always ready to put the pedal to the metal. Then you had, also out of China, a record number of lending taking place in their economy. Record loans. This is stimulus, folks. That's what this is. things are coming down. Defaults are going up. Consumers are over-leveraged. Banks are over-leveraged. Corporations are over-leveraged. Governments are over-leveraged. And all the government can do is print money, try to cut taxes. They're running out of ammunition. And instead of coming to the podium and saying, look, we have a problem, this is how we're going to solve it, they just say we're just going to continue to do more and more of the same that led us into this mess, and is going to set in motion a process that is going to be so painful, I'm afraid. It'll be something that the world hasn't seen since the Great Depression. I hope I'm wrong, because a lot of people are going to be affected negatively. But I don't think I am, because this is just sort of the laws of economic gravity. It can only go up for so long. It can only bubble for so long. Now, in continuation of our list of Deutsche Bank's 30 risks for 2019, last Friday we left off on point 19, which was the escalation of Yellow Vest protests in France. Of course, they did protest again this weekend, which was the 14th straight weekend of protests by the Yellow Vest movement. Now, moving to point 20, which is the European Parliament elections, that's sort of in line with it. Of course, the French President Emmanuel Macron has some issues, but now we're talking about the European Parliament elections on this list, which are slated to happen, I believe, in the spring or summer of this year. What's going to happen? Is it important? Yeah, it could be. It could be if there is a quote-unquote nationalist movement that gets more people in the European Parliament, like Nigel Farage of the UK, which was a huge voice for the Brexit. Now, the Brexit notwithstanding, my views on the European Union are known, and I'll continue to say them. I do not think the European Union is going to look anything like it has over the last decade or two. It's just not. If it even survives, I'll be surprised if it survives all of this at the end of the day. What's going to happen with the European Parliament elections? I don't know. We could get nationalists in there, and they could be like Nigel Farage, and they could say, we're done. We're not doing it. We're not paying you guys. A whole bunch of overpaid bureaucrats that nobody knows. We are not relinquishing our sovereignty to you. Kiss our rear ends. End of the story. I doubt that happens in large enough numbers to make a dent. But there could be a group. Otherwise, it's just going to be par for the course. It's going to be a bunch of unnamed bureaucrats who are overpaid, who have fancy titles, who get to go to Brussels to tell people in other countries what to do, and they have no responsibility, no accountability. So it'll just be par for the course. But there are risks. Then you have Deutsche Bank, which is a German bank. Point number 21, which not many people are talking about. Continued inflation of housing bubble in Germany. Continued inflation of housing bubble in Germany. They're calling it a bubble. Bubbles burst. You have Germany that just by the skin of their teeth avoided a technical recession in the fourth quarter. If that starts to drag out further, and we have people losing their jobs in greater numbers, wages dropping, yada, 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 you're going to see some defaults. You're going to see some problems. 22. Italian fiscal situation. Well, we know they're in a technical recession. We know that puts a whole bunch of strains on their public finances. They've been in negotiation with the EU, ECB, to get their financial house in order. But when you're in recession, it makes it a lot more difficult, doesn't it? So that's already starting to unfold. Point 23, house price crash in Australia and Canada. I talk about that all the time. All the time. Because you don't hear much of that on the mainstream media. You know, there was a time shortly after 0809 where you thought the Australians and the Canadians, who were not as affected as the U.S. and some other countries in the housing market, learned their lesson. And I think for a couple years thereafter they did. And they were a lot more cautious, they were a lot more careful in their practices. But when the world embarks on low interest rates and money printing, well, that money's got to go somewhere, doesn't it? And housing is a big asset. You can inflate housing prices quite a bit and do so in a short period of time. And that's exactly what has happened and continues to happen in Australia and Canada. And it's back here in the United States, folks. Don't kid yourself. And it's definitely in China and in Hong Kong. Point number 24. Chinese economy less and less responsive to stimulus. I had given a previous example of this in previous podcasts. Diminishing marginal returns. How much more and more medicine can you give to the patient before the medicine kills the patient? It's just a matter of time. These are structural issues that need to be faced head on and need to be changed. But it's too difficult to do that, I guess. Instead, let's gloss over it. Let's kick the can down the road. Let's print more money. Let's try to do more tax cuts, at least temporarily. That blows out more deficits, makes the debt even worse. Then we have to print even more money to fund ourselves for this ridiculous policy. There's more inflation, and the whole thing continues and continues. When is it going to stop? I can't time it. If I could time it, I would tell everybody, and we'd all be billionaires. Billionaires. But I can't time it. I just cannot time it. But I want you to be prepared. I don't want you to be caught off guard. And I will do more shows on this topic, and we'll have a conversation on what you can better do to protect yourself. All right, everybody. I'll leave it at point 24 to today. We'll pick up, I'm sure, on point 25 either tomorrow or some other day in the week. Thanks for joining me. Pleasure having you. Please like, share, subscribe, leave your comments. Let's make it interactive. I enjoy that. And we'll catch you next time. This is the Capital News. I am Alex Karitis. Godspeed.